Hi, my name is Michael Benavides, and in this project we're going to be covering the history of money and banking from 1939 to 2020. Now, starting off with the Great Depression, that is when, in 1939, that's when it ended. And the Great Depression was sparked from the stock market crash in 1929. It was essentially the most severe economic downturn that the United States has ever experienced. And shortly after that, in 1941, that's when World War II began. World War II lasted 4 years until 1945, and it had a drastic impact on the United States, with federal spending totaling more than $321 billion. In 1948, the FDIC repaid the initial funding loans of $289 million to the U.S. Treasury and the Federal Reserve Board. Lastly, in 1956, the Bank Holding Act of 1956 was imposed, and it prohibited bank holding companies headquartered in one state from acquiring a bank in another state, unless that other state's laws authorized the acquisition.
Hello, my name is Nathan Osornio. I will be covering 1960 to 1979. In 1965, the Great Inflation occurred. In 1967, the devaluation of the pound by 14.3% was also apparent because of the systematic impact on the world economy. In 1975, the Vietnam War ended, and the spread was over the term of 5 presidents, including President Truman, Eisenhower, Kennedy, Johnson, and Nixon. The conflict claimed 58,000 American lives and 3 million Vietnamese lives. Throughout the war, the U.S. was funding a lot of the war efforts, and they had a really big involvement in the war. Whenever it ended, the money printed had an enormous effect on the economy. The inflation also spiraled out of control after the war ended. Thank you.
My name is Joseph Stevens. I had the years 1980 to 1999. So in 1980, Congress passed the Depository Institutions and Monetary Control Act. This deregulated financial institutions that accepted deposits, and it strengthened Federal Reserve's control over monetary policy. In 1994, the Rigel-Neal Interstate Banking and Branching Efficiency Act removed restrictions on the opening of bank branches in different states, reversing the effects of the McFadden Act of 1927. And in 1999, the Gramm-Leach-Bliley Act repealed significant aspects of the Glass-Steagall Act and the Bank Holding Act of 1956, which allowed banks to offer commercial banking, securities, and insurance services altogether, all under one roof.
My name's Connor Podsednik, and I'm talking about the years 2000 to 2020. Over the span of those years, several events have happened that have impacted the banking industry greatly, such as 9/11, the stock market crash. I mean, even this year we have the coronavirus that is destroying our economy. But I'm only going to have time to cover 2 that I found the most important. Due to the 9/11 and accounting scandals at Enron, WorldCom, and Tyco, the Sarbanes-Oxley Act was passed, which I find to be the most important act in that first 10 years. And what it did was it established the Public Company Oversight Board that audit publicly traded companies, and it required CEOs and CFOs to sign off on annual and quarterly reports to make sure there wasn't any fraud happening, and that put their responsibility on them. So if it was to happen, then it would to come down on them, give them incentive. And the other important thing was the Dodd-Frank Act of 2010, which there's so much that happened with that, but the main thing that it did was it was an attempt to prevent another stock market crash from happening.